Good evening, all. This is Fatty MC. It's a retake of the webinar we had scheduled for yesterday. Unfortunately, we had some technical issues on this new machine. It's a monster machine on Windows 11. Highly recommend to everybody. Just make sure you got a lot of memory. I made a mistake. I just ordered more memory to come in from the manufacturer. It's a HP Envy. It's 5:07, 5:08 p.m. February 3rd, 2022. It's been a long week. Let's just move on quickly. No update needed on the housekeeping and stuff. Some of you were in the webinar today. Was all-day open house. We'll have one next month. In the meantime, let's get to market timing. We've had a tumultuous couple of weeks. Let's start with our calendar first. As you know, tomorrow is a big day. It's a non-farm payroll. For me, it's between that and FOMC. And then a little bit on the option expiration. These are my 3 days of the month. Of course, FOMC is not every month. The next FOMC is right before spring equinox, which would be, let's see, March, I believe 15 and 16. I think we may see a turn. Some of my cycle studies show that that week, that third week, we could see a low, a tradable low. All other things being equal. Of course, news is something that we cannot plan on or count on. It just does its own thing. But we'll get to that. So let's go here to consensus data for tomorrow. Usually, Michael is good at it. With Santelli, but we'll see how it does. Last one he wasn't there. Good. Estimate is 150. 199 is the last one. Obviously, we got revisions. As you know, these time series are extremely volatile, so one reading means nothing. But I like to see first and second revisions. Now, if we go back, let me give you this preview to Wednesday when ADP came out. Yesterday morning, that was a problem, big problem. Negative 301. And look what the time series were. 807 revised 776. Consensus comes at 225 for January. These are for December. We come in at 301. So usually there's some correlation, not precise. There have been times that it hasn't, but that's an indication tomorrow could be a problem. Problem meaning that bad for the economy, good for the market. It puts basically our revered Jay Powell hands in the concrete. There's very little he can do going into the March FOMC meeting. But market could rally, and that could set up almost a perfect storm. So that's where I plan to put my put spread on. I almost put the put spread on today. I know my parameters I want to do, but then we kept on selling. And I said, I'm not going to short the hold. And now Amazon changes all that ball game, and tomorrow becomes a new challenge again. So we'll find out. But 2 days ago I was long. Yesterday I reversed because it was a big pop, and before FP news came, FP was having problems, and I just said, yeah. And so I went to short. I'd like to be short. I was uncomfortable with my long. All other things being equal, my personal bias right now is that we're near peak America. Everything is too high. It's just this affordability issue. You're gonna see it in real estate. You're gonna see it in the bonds. You're gonna see it in loans. You're gonna see it, and you see all classes. All asset classes are a little bit overpriced. Why? We've had 14 years. We've gone up. It doesn't matter who's in charge. Yeah, it's not even a business cycle issue. It's a market cycle issue. Economy is not that great, but market is way ahead of it, and it needs to catch up. That means it needs to slow down a little bit, and I think we're going to see that. I could be wrong, but I haven't been that bad over the years, so we'll see if history is any indication. But numbers that I want to see is what's going to happen with private numbers tomorrow. Private payroll, that's a key number there. Manufacturing, of course. I usually go to BLS. It's a little bit difficult at the beginning because everyone's hitting BLS.com. But I want to go there and take a look at in more detail what they have. For example, construction, hospitality. These are industries you want to take a look at. And of course, I'm going to pay attention to weekly earnings year together. More importantly, average work week. This is a number I always look at. Okay, and participation rate. Unfortunately, recently this used to be much higher, 64, 63. I think we may have even seen 67 at one point. But now, because of COVID, it's artificially pushed down. So that's what I would look for. Just remember, the range is huge. Negative 400,000 to 280 for tomorrow. That's a big report for the month. I don't care about the rig count. Jobless claim came in today. Let's see. That was a negative 23 change for the week. So, we're kind of this doesn't. It's noise level right now. What else? I didn't look at productivity. Give me a second there. I want to see factory orders. We got too busy this morning. Yeah, we had open house. It was busy. Okay, non-farm productivity 6. Oh. And labor costs up 3%. Well, that's annual rate. That's not a problem. Okay, hold on. And then let me see factory orders. These are basically durable goods. Well, kind of. I actually got a call. Talk to my friend Steve from Richmond Fed. Yeah, because I don't know what's exactly in there. New orders for both durable and non-durable. There you go. That's not just durable goods. Durable goods are more important in my opinion. So, point 2, slip by 0.2, slip by 0.4. See, this is. I don't know what Jay Powell was thinking, but raising rate, I'm not sure it's going to be smart right now for the economy. But certainly, they see that data we don't see. Chart-wise, I'm more worried about anything else is the Treasury bills, the Treasuries. And we're hitting, this is a 3-year high, I believe. Let me see. Yeah, that's a 2-year high. Yeah. 2-year will mess this up. It's a 2-year high. So, covers COVID. This is the COVID era. So we're near the highs of the 2-year. So the 30 is way up there. But look at what's happening with the cars and the list. We're up there. Okay, why don't we start our chart review? Okay, unless you guys have any questions about econ data, economic calendar. Okay, all right. What a day this has been. What a difference. At one point, we closed 111 handles. I don't remember a day like this in a while. This is just incredible. Remember, it's not just this bar; it's from the close. The change is 111, so huge day. Let's see. CI's pulled back, volume popped. So now this sets up a potential retest. We're not. We want to see one of these, the one and the second one. Yeah, it's kind of, but a better chart position and possibly change of momentum like this, change of momentum right there. That's a big reversal. We'll see. So I agree with some of the commentators out there saying we're not out of the woods, and when you go up to 5, you need to another retest of that. So what would get us there? I don't know. It's a catalyst. It's hard to predict the catalyst. Could be stuff with Russia. Could be oil prices. I mean, oil in the morning was ripping. So we should have even related those two. And more econ data. There's nothing from FOMC now until again. Probably 7 weeks from now, so that creates some calmness. But again, I would look for any catalyst and measure it accordingly. All I know is that we pulled back strong. Good chance tomorrow we go back up. I want to see how far back we go. Can we get back and reacquire center line or not, which is 45.40. That's a 0 sigma. Okay. Remember, before we were down here, my goal was what it does at 200 day. Obviously, went too far. I jumped in. Then it went too far, too close. And I said, okay, this is a little bit too much. Then FB was having trouble mid-session. I said, we got to get short. And look what it did now. Nobody thought you're going to have a crash of FB. FB is down 27%. I don't know what it goes down now, but We can check it here. FB. Well, sorry. Okay, FB is down 25%. That's a crash. That's a crash. So tough. Look what it went to sigma level. Yeah. This is a Z score. Went to 3.5 sigma. Okay, so that being a fourth or third on the Nasdaq 100, it took a toll. We're at above 200 day. I think now probably we're going to see a test here. Maybe a pause, maybe because too close. And then, of course, if that happens, this is going to be a lot worse. But it won't be tomorrow. Amazon's going to help this baby. Okay, let's go to Canaries. Canaries are a coal mine. Specifically, we're looking at these two. Outside bar. Okay, remember. Now we pull down. What's outside bar transportation? So, not looking at Amazon, this says we're getting soft. But to me now, Amazon is a retail index, if you think of it this way. There's really no big retail business left compared to Amazon. Every market they've showed up, they've walled up, boom, there, it's gone. So, and then they just raised their Prime membership to $139. Between the videos and the packages I get, it's a bargain. I probably have a package a day from them and probably watch something on their videos, or at least if it's an archive, you see it there. So I think the people are going to stay with it, $139. Great idea they had. I know at the beginning, people were wondering if it would make sense or not. I jumped in there. Like within 2 or 3 months I was on, I jumped in there. And this was like, I don't know, 2008? More than that. Probably 2009, 2010. Of course, they did not publish their data until we get to 100 mil. That was big news, I remember, on Amazon. And so, more power to them. We've had hit and miss with Amazon for earnings. Very difficult, but we can always go back after a day or two, if you're following the 3-day rule, to attack Amazon again. Most likely to the upside. Notwithstanding what the market will do. That's another major issue there. Now, Russell. Russell is a different story. Russell is, and what is Russell doing overnight? Russell also wrote, no, Russell did not turn. Yeah. We'll talk about that. I'll bring that chart. We'll get that. Yeah, Russell did not turn. So, in the aftermarket. That's not good, guys. That's not good. Now, I hear some stocks are 60, 70% down. Not the top part of Russell 2000, but let's say after the first 50, after the first 100, they're down heavy. Okay? It's being masked because of the money managers parking their names in fangs. When this thing unravels, could be difficult. Very. So, let's see how this thing progresses. Let's see. We're getting set up for death cross, like you have here on the Russell you had. That's what happens. A lot of people have to sell and get out. It's a forced selling. You saw that there. But we got some room there. A lot of room here. We'll find out. Now, where's our count? We usually do a D-trender count, which is a differential between the price and the moving average we're looking at. This is the 50s. This is 200s. So 1, -2, 3, 4, 5, 6 now. 6 out of 8. Earlier there were 7. 8 out of 8. Last week was 8 out of 8. And you would say, okay, maybe a bounce is coming. A bounce did come. Remember, there are 25 million new investors in the market between Reddit, E-Trade, and Robinhood. These guys have not seen, now they're a little less active now. Someone just called me telling me that they're less active now because the Momo days are gone. But remember, they have not seen 2007. They have not seen 2001. They have not seen 98, or for that matter, 87. Okay? Or early one, my exposure was the silver crash. That was 729. This was March 28th, I believe, 1980. It was a Thursday. It was what a Friday that was, 729. I put my dad in there. I didn't have any money. I was just starting work at Norfolk. I put my dad's money in there, and he was a basket case for a day or two until it just took off. And then he thought I'm Moses. I walk on water. So Here's the reason. There was a big drop in the index, in the Dow, and also a huge volume. That's usually a buy. That's called capitulation. We haven't seen it yet. We've seen it here. It's not capitulation. Yeah. No, not yet. Not yet. The panic has not set in yet. What? We're near all-time highs. Everything is hunky-dory. Yeah. Most of my smart traders, I'm not saying hedge funds, I'm talking about individual traders, active traders who basically sell the company and now sit home instead of golf or shopping with a wife. They trade. They think that from what they see, they're just getting rid of their Bauer stocks. They're looking at the beta. Sometimes studies show that we should have a low put in. I'd say second to third week of March. Third week of March is favorable with some hedge guys because the FOMC is there. And also expiration. I like it because March 20th is Persian New Year, is the spring equinox, and always is a trend change. We saw it 2 years ago, exactly that day. It came on a Friday. The turn came on Sunday night on the futures. So not even one business day. So that's what I'm looking for. If everything held on and we go drip, drip down, I think you could see a nervousness building up, throwing baby with bathwater out by third week of March. So if you have any stocks you're worried about, the beta is too high, question, do they have a good management? Do they have good balance sheet? Do they have good products? Any of them is a no, out. Hit the eject button. Shoot first, court martial later. Because when it gets tough, it's not going to be easy. You won't have time, trust me. And you get emotionally too involved with it. Don't do that to yourself. Okay, let's look at SP1 and Momo. By the way, if I'm going too fast, slow me down, okay? Interesting enough, the system went long. Yes, they closed. Usually this is wrong, by the way. It's inverted. Look what we did today. This is a daily. This is a mechanical system, trend following. No parameters changed since, I think, 2008, I think, or 2007. Or even could be even sooner. I forgot. I think it's 2008. I forget. There you go. Long on a weeklies, wobbling back and forth. The short there was not bad. This long was an issue, okay? But it kept it short. There's no indication here on weekly high and lows. This is the highs. This is the lows for 52 weeks. Why? The numbers are too low. Neither of them come to play. And we're kind of mid-zone there. We're not too far down, not too far up. Now, some people who are long up there, they'll disagree with us, but this is just perspective of what your entry point is. What I don't like is what SP1 did. This is not good. This SP1 pulled through a central line was not good. Of course, Momo is a little bit faster, smaller brethren of it. But right now, SP1 is getting my attention. So this is not good. We got to watch. Yeah. Let's go to a skew. Look what the skew told us. That's all-time high there, right? Hold on. Let me see if we have that on. It should be all-time high. Yeah, let's. Is this on? No, hold on. Well, that's data 2. No. Let me put all-time high here on data 1. Yeah, that's this. I did the all-time high on the data 1. 100. Okay. Inputs, general, yes, SPX. So there you go. Okay. Look where it was. All-time high. It says we have a problem. Why? Look where it was. The design limit is 100 to 150. What's the reading there? 156 and 1.5 sigma, right? Measured against itself. So this was a mild signal. I don't think we've seen the move down yet. And it's gone, now that even we rallied, it stayed low. That means some of the people they cashed out of their puts. These are out of the money, tail risk, SPX puts. Out of the money, okay. I was not involved with the design. I was involved with the test together when it first came out. Citadel got it first, and I got it pretty much right after that through another hedge fund. But interesting item. It updates at the end of the day. Okay. It's not tradable. That's what I like. It's not tradable. That means you cannot manipulate it. Okay, let's go to TD. Okay, interesting setup today. We almost went. We almost went to zero. A little bit higher, but been zero on that drop today. This was ferocious on ES. ES is down 55, but look at SPX, 112 points. The low was 70. We closed 7 points higher. Of course, this is right before the news came on Amazon. But look at that pattern. Down here was go-go days. This is yesterday. Look to where we hit today. Big difference. I don't know if any market can withstand this too many times. We were at 74, 73 and change. 73.56 there on SB2, one of my best, most reliable indicators for short-term signals. We do not send this out. It's not subscribed. We're going to use it in these charts. But I do share it on both Twitter and in the chat too. Went to 75 almost, a threshold, pulled back, and we're at 46. Of course, this will adjust tomorrow because of, again, Amazon. We had a rendezvous point here. All three at stock hour size. That's trying to shoot up. So we'll see. Now, remember, on put call, on PMT, I'm going to put a long-term trade on here, not a short-term one. Why? Volatility is too high, and I want to make sure I'm using something with not that theta sensitive. Question. Yes, when we post a trade, when we post a signal, yes. We haven't sent that out yet. I've asked you to try. I said, you need to go through one cycle before you trade it. You haven't done it. We haven't done that. You wait to see how the emails come. We just changed our bias. We have not put a trade on yet. So there are no stop loss or anything yet. They'll come in email to you. Yes. You need some tea. Yeah. You guys, are those the stock? No, sir. No. Are those stock indicators in the trade system? No. Those are mine. You can lease it. Go to, we have a slew of them. Go to members, go to product. We got 3 levels: happy, the basic, pro, or the expert. Expert has AI in it. Okay, you can do that. Between the change of bias email. No, there isn't. Because we have not, because I am not ready to put the other trade on. I've told you that. We go on my schedule. There's going to be a little delay. Why? Look what happened. If I put the call on, we've been fried. It's called experience. Okay? Yeah, I got a little white hair. It didn't come in from going to school or buying it on Amazon. It's called experience. There's a reason I'm timer of the decade. Right? So calm down, have some tea, and read some Ruby. Otherwise, this product is not for you. I do not move by anybody's schedule. I move on my schedule. Otherwise, you know why? Because I have too many people. It will be chaos. If that happens, then I have to ask you to leave. It's that simple. Okay? Thanks. There's a rhyme and reason behind it. But you need to go through a cycle. You just signed up. So I'll be more happy to chat with you one-on-one to put you on the right track where you can see why we do this. Or you can wait and see it. But if I'd gone long, you asked me the same question the other day on your email. If I'd gone long here, where we've been now. I mean, listen, we may come back tomorrow, but we don't know. But we have certainly given back quite a bit. That will kill our delta. This will kill our delta one day. When the walls go this high, let me get to the next chart here. Let me get to, when the walls get this high, you can't just throw options out there. You know why? You're paying too much for premium. You know who you're paying? You know who you're making rich? The market maker. How do I know that? I used to teach at SIBO. The Admiral Esposito in the chat room, 27 years, market maker, DPM, designated primary market maker, founder of Wolverine. He's my mentor. I learned a lot from him. He's the one who said, what are you doing in California? You're not going to learn anything there. Come to Chicago. The 8 years I spent in Chicago, I learned a lot. I was in the trenches. You learn certain things and you apply it. I walked in 2008, hunky-dory, everything is good by Super Tuesday, early February. Look what happened by 9 months later. Yeah. So you gotta realize the issue is not giving you a trade. That's not my point. If you're looking for a trade, I'm the wrong guy. I give you winning trades. To do that, I need to get it where it's doable. We can get there and do it. If I cannot do it, then I'm not. Remember, when I pull the trigger, it goes to like 400 people. I can't go because you want to trade now. I don't want to fry 399 people because you want to trade. So please bear with me. If not, it's not for you. I'll be more than happy to refund you. You know why? Because I'm spending too much time. Yeah, it's cheaper for me to refund you. So please either agree to conform or this is not for you. I just want to be very polite with you. But I'm not into getting prompted or pushed around. I do things on my schedule. I've always have all these years. Never give in because otherwise it would be chaos. Mark, we can do, if you have a trade session account, we can give you a trial. Send me your let's see what I need for that. I need a user ID. Yeah, the one that you log in, not your password. And we can set you up for a trial. Well, 30 days, you could see what's going on. I would start something in the middle, maybe the pro, the expert a little bit too much at the beginning, okay? So you could see. The reason we did this, so you realize, I used to trade using trade session earlier, back in the 90s. Earlier, I just lost money left and right. Why? Because of the indicators. Now, why? It's free. No, email me. Not here. Email me, please. Because this goes away. Yeah, I need it for the record. Yeah. Just email me. We'll set up against your email. Not a problem. Thanks. If it's good, why is it for free? So it took me my email admin at Hamzy Analytics. Yeah. If you go to the website, right here, it's right here. Contact us. Admin at Hamzy Analytics. Okay. So you got it. And there's the videos you need to watch. Kind of ease yourself in. Yeah. I don't want you to get into trouble. Yeah. Listen, giving tools and giving trades are easy. But I don't want to be like other websites. I want you guys to win. A good customer is a happy customer. Okay? And it's not going one trade. You measure over time. Not trying to be hard with anybody, but it's called tough love. We all have to grow up. That's why I got. Some people play tough love with me. I appreciate now what they did. No, but now SQ is not an indicator. SQ is a data. But the Sigma channels is ours. It goes back. If you go back, you'll see there are plenty of them. And there's a webinar you can watch. One of the things I would want everybody to watch, if you could, go to educational webinars. Okay, go to, write this down, please. May. This one, May 22, 2014. These indicators are about 20 years old. They've been around, 15 years old. We haven't changed them. That's how good they are. But it took me several years to get to that point. I mean, I've been with trade sessions since 1992. I was the first 150 members based on my the dongle number. And also print this first, the timeline, so you know where to go on the tape, on the video, okay? Print that, put it aside, then go back here, and then you apply the download and go, okay? Yeah. It goes a fair treatment of each one in depth for several minutes. All right, thanks. All right, and we just, by the way, we just started our systems to show you. It's not easy to get this point. You have to start on good indicators first. And it has to be proprietary. If you're using an indicator everybody else is using, what good is that? You shorting, you're all shorting. That's not good. I want to be contrarian. I want to short what everybody's buying. I want to buy what everybody's selling. This tells me that. Look at that reading. As it goes peaking up, I know something wrong is coming up. Remember, I was short here. Don't forget that. Then I stopped, went long. Near the end, I got into trouble, switched here, and then here I shorted. My bias is a short side for now, until proven otherwise. Anyhow, SP2 shows we got problems. It could be, you could consider noise level, but I'll tell you something. We get to this area, about 430.50 area, we're going to go. That's going to be a tough area. A little bit below 200 day. It's going to be a tough area. Of course, by then, you could see where the 50 is going to be. You're going to be getting some for what's called a death cross, where 50 drops below 200 day. CI, am I saying it right, CI? Okay. Look for a potential trade tomorrow afternoon. Okay, I tell you what I was going to do was a 440, 415 SPY, but obviously it has to be shifted. Timeline was either March 18 or March 11. Okay, well, the premium was a little bit high, so I had to take it. Otherwise, I would have gone with the trade. Yeah. Oh yeah, what follow-up? Which chart here? You're talking about this one in versus 08. Boy, it was much bigger. We dropped half the value. Right, we were at 1300. We went to 666. Yeah, I mean, not the same period. It was much longer period, but we had 1300 in about I'd say mid-July. By next March 7th, which was the low, I believe, 2009, we're at 666. Yeah, pattern. Yeah. By the way, there's a March on that video section. There's a March 6th, I think it is, or March 8th webinar is down there. Go to listen to it. Hold on. There's no edit here, by the way. We don't edit. That keeps us all honest. As Americans, back then was a form I couldn't even edit anyway. Listen to 999. There we go. May. Listen to this one. Listen to this one. It's going to pick you out. This March 15, 2008. No, I'm sorry. No. Sorry, 2009. Not that. I'm sorry. Take that back. This sooner. That's what we saw. This one. That's it. Watch this one. March 7th. This is the day before the low. You're going to freak out when you listen to this. I called it. Listen to that. March 7th, not 2009. Yeah, that was this was 2 days before the low. The low was put on the 9th, which was a Monday. And this was unusual. We had it on Saturday morning. And we had thought the war is coming to an end. Go take a look. Anyhow, you know what? I was lucky. If I get it right, I'll chalk it up as lucky. Otherwise, you get cocky and then really I can get into trouble. Okay. IRX, which is a 91-day discount rate, not EBY. These are EBY. You have to turn this to an EBY, equivalent bond yield. But these are YTM, yield to maturities. Part of us going down, these got to spike. What's going to cause it? Of course, the Fed. Could be the oil. Could be the bond vigilantes. But I would watch the 5 and the 10 like a hawk every day. And look at these levels. The support resistance levels are crucial. Look where we are. We're right above pivot now, so it's not that bad. What if this goes to like 1928? This, by the way, you divide by 10 to get actual yield, so because it's the index. So today we put at 1.6. What if it happens to get to, like to say 2.0? We're gonna be deep trouble. You're gonna see panic everywhere. If you get to 20, you're probably looking at 22, 2.2 on that 10-year for Treasury credit, which is the top credit in the world, right? So U.S. Treasury has the highest credit in the world because of ability to tax and the reserve currency, and they've never missed. It's the biggest Ponzi scheme. We all know that, but they've never missed principal and interest. So these are the numbers that we'll look for. Take the second level out. Then I would be extremely nervous for the market. But by then, you're going to see a fall already. It's not going to go there unannounced. You're going to see these results as it inches up. If it doesn't inches up, we just put the pain to the right. We shift it to the right. We kick the can down the road. Given where we are. Now, 2 issues are happening. Let me read this to you from a very key UBS money manager. Hold on. 1 second. This came in today. A lot of commentary. Hold on, guys. These guys are killing me. Hold on. One after another, Murray. Hold on. Okay. No worries. Yes. Hold on, I gotta call it back later. Let me read this to you. I think it's important. Sorry, I have too many here. 1 second. There we go. Okay. Says VXN is at 35 is a market buy, at 25 is a market sell on VXN. That's one. It's pretty good volatility. We went actually went to the same school, graduate school management at UCLA Anderson. It's the second derivative school in the country after U of Chicago. He's talking about his 35, yeah. My charts say we could be, I'm sorry. My charts say the buys at 48. So that's a 4 sigma. We want to be testing that. So as we pull up, maybe it'll pull down a little bit, but at least 45 and higher. The low is going to be somewhere in this area on VXN. Although probably it's more stable call if you use VIX. Much bigger name, right? 500 name versus 100. But this is more volatile. One more thing. Hold on, let me read this to you. Okay. We're going lower because the premise of earnings growth is being seriously challenged, and the multiple expansion is seriously, I can't read this as a translation on the keyboard, by the Fed. So between the Fed and the market participants on the earnings growth, I think you're going to see this grinding that lower. What did he do? He bought SQQQs in mid-30s a couple of days ago. He is going to sell it tomorrow by 40s, and then he plans to buy. This is a reverse. And then he's buying the TQQQs, which is a rally up. He may have already done that. Well, you could do it after market. He's doing cash, not options. Pretty good guy. Managed about 2.5 billion. He also said if Amazon disappoints, we're going lower fast. Right? Let's see. Yeah, and then we talked vols on Amazon as an alarm with 200%. So let's move on. Okay, Larry up and down. We added recently the Russell to it with the Russell volume up and down. I think it's important to keep an eye because of the impact Russell has on versus NDX. And as you know, now there's a huge following on this. I didn't know that. On Twitter, there's just so many questions back and forth. A couple of guys I really respect, you might want to follow, Walter Deemer and Bo. Bo is Norseman 1. Let me show you. You may want to take note of this, okay, quickly. Bo, I know down the road. I've known of Walter, but I haven't interacted with him. Bo is, there you go, this Norseman, okay. Norseman 1. You want to follow him, and you want to follow Walter. I put both their names in when I do these charts. You see it? I put them in there. You should follow these two because, as far as I'm concerned, but for interpreting it, they're very good. There's also a PDF that we posted up there. Where did we put it? Hold on. It's on. You can send me an email. I can send it to you. It's so important that we put our own servers so we don't lose it. Yeah, it's by Paul Desmond. Paul Desmond. Jesus, where is this? No. Paul Desmond used to run Lowry Research Corp here in, I believe, outside of Tampa. I think it's outside Tampa. And you really need to read that to get a handle on what this chart is. Also, with its brethren, which is something that one of my moderators did, this one, the buying the buying power index. Okay, it's look at the timing now. Peter Cook or Marvin, he usually does the bull side only, the longs, not the shorts. I like to run both, but you could see he has been long at the open of 2 days ago. We'll see how good that is. You got to give it a little time because you have noise and you have events. Long on mid cap, long here on RTY because they're all underwater right now, and then still short. So it's a mixed company at times, but if you have a trending environment, It's a comforting thing to have. I'm still having problem recommending it yet because maybe I don't know, but there's a PDF on that. Yeah. Oh, is that right? Yeah, Ken. Yeah. Walter is very good, guys. He's been around a long, long time. Yeah, yeah. I mean, I've followed him years. Yeah. He's an institutional, technical guy. Yeah. But anyhow, Paul Desmond. If you go to webinar, I'm sorry, go to here. It says it's called Paul Desmond. Let's see. It was Larry search research. There you go there. Yeah, that's Paul. That's it. Now, he was chairman of capital management also. Now there is a there you go on market tops and bottoms. So it's in this area. If you don't find it, I have a link I can send you guys from our servers. It has to do with the picking tops and bottoms. It's really it's a high tech tape reading. That's basically what it comes down to. And these two are the best in that, both Walter and Bo. I'm new at it. Okay, things are not mine. I didn't work on. I'm not gonna take credit. I don't need to. But I would go to people who are expert at it, learn from them. We got to learn from each other. Okay, let's go. That's our charts. Let's go to one of our. Well, that's one I worked on, by the way. I love that airplane. Except the doomsday flight we may have to take one day. Scary. I have nightmares about it, but that's okay. I work for a chief designer and learned a lot. Let me bring this down a tap. Okay. Is this updated? No. Why not? Hold on. This is probably because we did it. Yes, there we go. Because I put the charts up before 5. Yeah. About 5:30-ish or so, these get updated by stock charts. Just write down this is the symbol. $, Sierra Papa X-ray Alpha, 200 Romeo. It's a 200-day percent of stocks above it. So it's a scoring indicator. Okay. Non-tradable. Just reporting what's going on, and you could see what's happening. You could see that. Okay, let me close in here. Typically, it's very slow, okay? But once it gets to a trend, it's tough to stop it. And look, it's not getting to the moving average. That tomorrow could be an exception, but look what's done. Boom, 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 boom. And it's a divergence. I realize that it's a very slow divergence. We kept on going higher and higher, and then it breaks. This tool, I've used it since that March webinar I talked about. I was just beginning to use it. So this is, let's say it's March of 2009. I started using it about here. I heard it in a webinar in Chicago, and boy, it's been something else. Now, the trick is to open the moving averages, 20 and 50, open them up a little bit, okay? That's crucial. Because they use, I think, defaults 10 and 20. That's too noisy. What I look for from a mathematical standpoint is a differential between the two lines. If they're too tight, ignore. But if they open up, that means they're not crossing. That's your trend. So you go through that. Okay. Usually after this, we go to our overnight chart because we were doing this in the morning. So this is the evening session. Okay, in 8 minutes, it's going to restart, but that's where we stop. Let's go to 30. I like this. 30 is a favorite of a lot of money managers. I look at 30 a lot. I look on the futures, and you can see what's going on here. This bothers me. Yes, we came back up also came back 0.60. Okay. Much better. Okay. Okay. But obviously, the reversal 53 from. Well, that's the yes. I'm sorry. That's this is the futures, right? Okay, fine. And remember, this has changed from 4 p.m. cash settlement, right? Remember, they moved the futures. CME moved the cash. They moved the future settlement from 4:15 to 4. So yes, from there we've gone up 53, but we've done 110 cash price. So let's see how tomorrow will be. I'll be pins and needles. I'll be up early. I'm going to go to bed early. We start an hour earlier in our chat for tomorrow. Again, this is unrelenting. It's at 90 now on the crude. This is March crude. So I think we should have had even a little bit higher here on Russell, given the move on the commensurate with what you see on the ESNQ. Not seeing it here. This is a bad omen. We're not going to go, as like we talked about here. No, sorry, wrong one. Let me go too many. Okay, as we discussed here, I'll go to the trender. We need transportation as an early signal of what's happening with the ES. Okay, same thing as Russell for NQ. We're not going to go very high if Russell doesn't go. The small caps are getting jammed. You're going to have problems with NDX. So jury's still out. Time cycle works as late March. Levels. Listen, let me go here. Levels, I've heard. This shouldn't be SPY. Oh, we have a SPY on this. Hold on. Sorry. Oh, I was doing a SPY discussion there with a fellow. Look at my chart. Hold on 1 second. Oh, yeah. Hold on 1 second. Let me put this back on. This is better. Okay. I'm hearing a lot of 3,200. Yeah. But my question to them is, what's your catalyst? I don't see it past 415 right now. That's a 3 sigma. That's a huge move. And you don't get 2 3 sigma this moment after it. Maybe 4,000. I just don't see 3,300. All other things being equal, whatever is priced in says lower than 4,100, let's say. But they're talking 3,200. That difference, we're gonna have a problem somewhere big, not small. I just think the unknown is probably put come right to, yeah. So at least, yeah. So that's my presentation for now. Any questions for me? I'm trying to keep it under an hour. It's 5:55. Good question. Usually it's 3 weeks. Why? If you look at historically, sorry. Oh, hold on. Let me write this down, Jason. Yeah, we keep track of our chart. This chart that we have. Let's see. Let me go there. Mm-hmm. Okay, hold on 1 second. You see our logic. Okay, that's a good question, by the way. We keep track of our charts. Hold on. I'm sorry, our calls. Okay. There we go. No, this doesn't like me. There you go. All right. We keep track of our charts. Now we change our indicators in in the fall of 2014, about 7 years ago plus, and then at that point, because I was kind of involved, not involved, busy. We had projects. We were working on a very big project at OTF. Listen, this is a loss leader. Okay, when I'm busy, this is not going to get priority. It's just not going to. You would do the same thing. So dollars and cents. Okay, I'm not stupid. So I was very busy earlier. So this is a movie. Okay, it doesn't like me. Okay, whatever. Let's go here. Okay. Sorry. Hold on. You would see the first trade is 14. And we came and said that. We said, listen, guys, starting early January, and went to our first trade that we had registered with Time and Digest. We said that we are going to go after every single 120 people in Time and Digest. We're going to print a deck of cards, 120 cards in it, not 52, like George W. did with Saddam's buddies. We're going after every single one of these guys. We're going to teach them a lesson. And of course, they were changed some indicators. Some indicators were changed slightly. Why? Because over time, you have to do some. And then we set it into motion. May, I get a call from John Bollinger. He says, I don't know what you're having for breakfast. You're killing it. Do you know that? I said, no, I haven't had a chance to look at Time and Digest. Why? He goes, like, you won, and there's the way nobody's around you. How did you do that? I said, I don't know, sir. I don't worry about it. Okay, so I'm good. Is he going to do better than that? I said, no, hold on. It's nothing to do with that. Let me pay attention to what I'm doing. I don't want to get cocky here. Now, we've kept track of it here. I know one of you guys asked for a copy of this. No, you don't get a copy of the Excel sheet, but I will get a snapshot of this column. No problem. I'm not going to sit down and give you my sheet because I've been hacked before. People have used it. I've learned my lesson. Not doing that. But we keep track of trades. Okay, and I think this should be 2 more there. So we have 162 trades so far. We just have to put it in the last column there. I mean, it's the last row. So at 162, on average, we have about 18 days. 16 calendar days. So for that, we did a study with the help of, again, Mark Esposito that said we need to go to look at about 18 days. I'm sorry, 3 weeks would be 21 days. So it's usually 2.5 weeks. I don't do that like that always. But right now, I'm looking for a little bit longer because I'm worried about vols. You can't do short term. The biggest scam in the SIBO is this short term stuff, the weeklies. So I'm going to be, you have a good question, Chia. I will be doing, my goal is to go late into, to mid-March. Okay, that's what my game plan is right now. Now, I could be wrong, but I can always adjust it. But we have very few times we've adjusted. Remember, it's not an option package. We have an option package, we're very active. This is point, shoot, and forget. It's a market timing. It's a market timing thing, okay? Now, the reason we put a trade there is just make it more interesting. And we cut back on it because I got too busy. And we cut the price down and we got rid of it. Some people complain. I said, I'm sorry, I'm busy. I just can't. I can't come and handhold you for a package that's $70. You gotta realize that. I'm talking to a second largest hedge fund right now on my algo. Okay? There's a chance that we just shut down everything and go do that. You gotta realize that. But you get timer of the decade, you're on everybody's scope. So I'm trying to do this while I can, given I can't sacrifice everything. But that's where I am right now. So I'm looking at that period. No, we do not give size of a trade. No, not in this package. No. In the option package, yes, but not in this package. This package is very simple. Look, here's what you have access. Go there, take a look. We never have done that. No. And there's a video that says that. You must not have had a chance to look at the video. Go in there to the option package. Say, PFD Pro, watch this video. Okay? I gotta see what's wrong here. I know there's an issue on there. I thought this was fine. I thought it rolled. Oh, okay. It's having these shots. Okay. I'll see what's wrong. But please take a look at that. And you can see on the order, there's no size. Why? Because I have all kinds of little trading. But, and this is usually we don't do anything more than average trade we do is, we get $4, $3 range. Here, for example, here's the difference. And what we do is this. We will, first of all, there's a buy exchange. Okay, there's a buy exchange, right? We put that in. Although we're behind with PMT, I said yesterday, we're behind on some documentation because I've been so busy. I gotta go where the dollars are. You do the same thing, okay? You trade NQ in size for a fund, everything else kind of becomes noise. Keep that in mind. We give that first. Then we do some charts, or we do a webinar here. Then we give you a trade, but the trade comes from Admiral Tico, my XO. And he'll tell you, don't trade it yet. This is the trade, but you gotta watch it. There's not a launch command. It comes in you get actually 3 emails. One is that here's actually 4. The buy exchange. Here's the chart review, if we think it's warranted. Right now, we don't need to. If I put a trade on, we already have this video right here. Remember, I'm time compressed. I need to have some sleep. I need to have some rest. Because if I don't do that, my accuracy drops, and you don't want me to do that anyway. Okay? So, then comes the trade, and the trade is setup. It's called setup email. Because setup email gives you this. But it's not a launch command. As a matter of fact, these are tentative. The launch command is within that day, maybe half an hour, 45 minutes later, maybe an hour later. It could be that we could trade on in the morning and they give you a launch command in the afternoon. We keep that as our prerogative. Okay? I'm totally in control. I don't go by anybody's schedule. I look at what is the smartest thing for me to do. And sometimes we have to change it. Are you with me? Let's say we put a tentative trade on at 10:30. Not before that. Not first thing in the morning because we have futures to trade. But let's say we put a trade up, let's say at 11 o'clock. The proposed trade, it's called setup. Then let's say I want to come in and I cannot get an opportunity to pull a trigger. It's not optimal, the way I define it. Let's say it gets optimal at 2 p.m. All times Eastern. But when I get there, these values have changed. So we'll modify it. You'll see it says updated the trade, okay, updated. Or the email says that these values get changed, then comes the trigger. The trigger is optimal. For example, it's not very smart to trade at noon, but there's no market bias there. It's sausage. It's back and forth. It's going to be either early in the morning or near the close, but not too close. We're not going to give you an order at 3:45. There's no time, because you have to realize some people are not in front of their emails. Some of them are getting it just on their phone. So we try to get our trades optimally. All other things being equal, if it's afternoon, no later than 3. This is again Easter, so an hour to execute. If you miss the trade, do not go in. If you have an emergency, you get the trade when you get home and you want to trade next day, no good, you missed it. You have to wait until we launch it. You can't. Why? Your delta, theta, and rho is going to change. But we'll never give you size. No, because people in an option package, we give it per 25,000. There is size in option package, but that's a different package. That's I don't know, 5 times this per month. That's 5. That's managed constantly by 2 people. That's a different ballgame. But this is just a market timing. This is something with extra juice to keep you interested. Our main thing is the bias. Most of our people, by the way, they want the bias. Okay, where are we long or short? What level we go? Now I gotta post this. What I owe is 2 of these. But you got the emails. You get the emails. It's just an archive. It's to be posted. But I've said we're gonna have a PMT week. I'm gonna catch up on this. But listen, Trump said infrastructure week for 4 years, and he's an ex-Democrat, right? And I don't know where he went to Fordham. So I'll get there when I can. It's gonna be probably next week. It can't be this week. I was still hoping. Let's put it this way. I'm planning to be next week. I think I can hold to that, and that was my prediction. I knew this week couldn't because we were launching 4.2. I'm just being upfront with you guys. I'm not trying to tell you what you want to hear. I'm not good at that at all. Probably I'm good at pissing you off because I speak the truth. I always do. You gotta love it or leave it. My point is, realistically, I think I still can do that. We have minor issues there. It has to be posted, and but I gotta have some free time. We're so bombarded now on the 4.2. You know, last week one account made 70%. 70. Yes, on the money trade. On the money trade, made 70%. In the afternoon, what was it that day? It was a Wednesday. What was Wednesday? FOMC. Remember how chaotic it was? Yeah. So when I'm busy on that, some things will get a little bit behind. And remember, this is a personal advice, right? I can't have like Nancy do this. It's not a regular trade. This is a complicated trade because you're doing a market timing. But I will catch up with the documentation. And my goal is, first of all, make sure that we're not behind. And we cannot fall behind. The problem is 2021. Before that, everything was good. Yeah, we were never behind. But we weren't as busy as we are now. So that's all you should. PMT Pro, you get the option trade. PMT, you only get this. This is PMT only. PMT Pro, you get this. You get the option trade. So in a way, if you think about it, if you're just PMT, I've already given you the trade. You just don't know the targets. That's all. Yeah. Or the stop. But you got the bias. Yeah. But the PMT, the option trade, I don't know which one you signed up for. But if it's a PMT Pro, then you get the second part. This has a logic in there. It takes from your login and says how many of these boxes is going to show you. Yeah. The levels are both, yes, the levels are the same. Correct. Yes, sir. Both is for SPX. And the trade is SPY. Trade is SPY because if I put SPX on, it will be too expensive for our average guy for that package. Yeah. So, I mean, I've got guys who like Wells Fargo advisors. They just want to trade the SPY long and short based on this signal. So they divide this by 10 and trade it. Just the SPY. They don't even do the option. So it all depends on what we do. And you can always change. You can go up, or down. So, but that's what we've done. In terms of confidence, I think that's a good question, but I think that's something you can ascertain from coming to these webinars. So we can answer. Because, boycott, sentiment changes. Right now, we're in such a high vol area, sentiment changes constantly. Mark, I use my info and request those PDF when this is over. That one PDF for the boycott, for the Paul Desmond? Yeah, sure, no problem. Yeah. No, you don't need to cheat. You don't, again, go to the webinar. Listen, one of the things I got to do is you got to follow my instructions. I'm not good at people not following instructions. Go to this webinar. That will explain to you why we're using SPX versus SPY. SPY is too noisy. Your stop should be based on that. You set it up as that. Even though it's the SPY, your spot, you could do it. You could do a conditional stop that says, if, for example, it's 45.25, close my position. That's what you do. Or you put an alert on your phone, it rings, you get out. Yeah. It's based on SPX, that's noise. History has shown on our experience that the best way to go is that. We do not give any calls on SPY. I look at the chart, but I don't. Now we give you this. You could see, because this is our call, for example, and these are key levels for that week only. Okay, for that trade, for that week, because they change. This is a weekly support and resistance on the hourly chart. Again, in the webinar. That tells me you haven't watched the webinar. I do that with people. I do, because I want to catch them. I want to see if they're following instructions or not. Yeah. This is about conforming. If you can't conform, you're going to have a hard time here. Okay. Me to use Outlook or no? Your email, sure. Yeah. That's this. No, okay. That's probably just trying to get your software there. Sure, no problem. Admin at MZ Analytics. No problem. But trust me, it'll come to you, Chi. Just check. Just take a look at it, you'll see. It's not that complicated. Yeah. Okay. There we go. That's the email. Admin at MZ Analytics. Yeah. Any other questions for me? You're quite welcome. I know you're impatient, but we'll get there. Remember, we're very high range. There were times I was giving 2 trades a week. My bias changed for another trader. But wasn't at these vol levels. You can't listen, you're not getting on the option side, I can't make money like that. Why? The change is too big. At the 37 vol, you know how difficult it is? You're just paying a lot of premium. You're guaranteeing yourself to lose money. Why would I want to give you trades like that? So we gotta wait a little bit. Now, in the meantime, I gotta watch remember my track on time of day is based on cash. It's nothing to do with option. I don't care about volatility. It's where you bought it, where you sold it, or where you went short, when you covered it. So don't mix the two. Again, please watch the webinar. It'll clear some of that for you. And don't trade the first couple of signals. Don't. Watch it. Watch it and learn. Yeah. It's much easier. Before you get into trouble. Okay. I always said what? Invest your time before you invest your money. That still holds today. I was saying that in 2000. Why? Because I thought in 2000, we get into trouble. And we did. Now, I wasn't in market timing back then as a professional. I was doing some basic. Actually, SP2, one of my favorite indicators. This was written in like 98. Okay. I was a very famous market timer was mentoring me. And he wanted me to put something together to be able to sense short-term changeover bias. And this is what I came up with. Minor changes later on, mainly graphics, because the tracing got better. We're at version 10 now. I think back then, we were 4. 5 was 2000, so it was a little bit before that. I think we're tracing 4, and I just started on tracing 3. The 2 was a disaster. 1, hardly anything worked. I mean, we were laughing at 1. 2 was a disaster. 3 or 1 started moving, and that's why I got on board. So this is what version 4 area. So some additional stuff was added. But I felt because of the .com issue that we could have a collapse in trading. Okay. No, you need to go to 10. You can't use 9.5 with us. I mean, you can, but you have problems. Yeah. Go to 10. Yeah, go to 10. Yeah. I just went to 10. It's about a year now. Yeah. I refused for a long time. I'm 75 miles away from them. I go there for lunch often. And they would complain, you still at 9.5? I said, how do you know? Said, well, your people call. And we get, they get profile. And your people call, they're still 9.5. Why aren't you going to 10? I gave him the same answer I gave Chair. I said, when I go there, I'm ready. Who you tell me what my schedule is? I'm Patton. Remember Catherine Pass? Hold on. There's a reason. Why do I want put my people to be guinea pigs with you guys? I told her. I said, when we're ready, we'll tell you. Now, we got there. I think we're at 60 right now. Okay? I think update 60, right? I think we start going there around 38, 39. I know it was below 40. We went there. So, why? Because I have no interest to be a guinea pig, I mean, I took a leap of faith going to window 11. So far, I'm happy with it, but we'll see. And by the way, 10 is a lot more stable. If it's a fast market, you don't want to be on 9.5. Now, here's the catch. It's going to take you a little bit of time to change your head where the charts are and the menus and all that. I mean, this is good stuff, that time frame you never had before. But it takes a while to figure out different things. For example, if you go to the system stuff has really changed. Now, I wasn't using system until August of this year because I'd given up. I did very sophisticated trade station indicators. I'm not sure it would be usable or be able to put into API with the help of this guy with the AI background. He's got PhD in AI, not a joke. And trade station experience. We crossed that bridge, but it was a surprise to me. I had no idea. I mean, you have to realize, last 6 months, my life has changed dramatically in terms of work we have done. I've learned a lot. And it's changed our trajectory for what we're going to do. And so we have to reprioritize some of the stuff. Yeah. By the way, please do not sign up for PMT yet. We have to change these pages. Yeah. This is not, this stuff, we're going to be slightly different. We have to. We already have begun to make some changes there. I don't know why it's not plugging. We take a look. But Amazon has done some changes. Our charts are held on Amazon. This afternoon, things were doing fine. But I think they're changing some of their permissioning. There, what's called ACL. I wish they would document it better. But we'll give you a more realistic expectation of what we can do and cannot do. That's why we also dropped the price dramatically. That's not good performance. Performance is up there. You can see. But what I don't bitch about is that time and digest. Stop tracking everybody. The last issue is this issue. This is the last issue, which is issue January 20th of last year. They claim that data vendor, that the system tracks all the people here, have changed some of the data feed. Everything is different. There's that. Now, there's still the emails work. We still register with them because I want a third party to register me to look over my shoulders. But it bothers me that it's not very competitive. I do want to get that ranking going. Hopefully they'll come back. So far they haven't. Their website is also not up. I don't know if you noticed or not. Go to our members landing page here. This is their website. Look at it. This is not good. Yes, this page is moved. Where is it going? See, that's not good. That's not good. That means that it's available for sale. That's not good. Now, they're not very, they're father and son, old school. They're not very technical. Okay? Yeah. I remember one time it took me a day for them to find my email. It was there. I had a copy. But it just had a hard time. So it is what it is. So, yeah. Listen, they've been good to me over the years. They were very fair. One time they actually missed the signal totally. My chart didn't match. I went back to them, and sure enough, they found it. It was like 3 months later. I was upset. Why? Because we were building what's called the OTF charts. This is what we worked on. This is huge. This is what the whales do. This is by hedge fund size. Okay, well, I was too busy with that in Chicago. So, anyway. but they caught up, and they're fair. Is there anything else I need to answer? Okay, we'll do the next one of these next Wednesday. Remember, we did this today because the audio was bad yesterday. And as always, it will be posted here. It's called our videos, which is the YouTube video. And we have about 100 people. Wow. Last week, this was 126. We've gone up about at least 100, maybe 150 people in 1 week. Wow. Okay, well, more power to them. Anyhow, so that's where we are. I see turbulence ahead. I see bottoming about spring equinox, which is March 20th. And I see year end around 5,500. But we have to get rid of some fluff we have. And I'm looking for capitulation. The sooner the better. Okay? And that's ideal for us. If it moves like that, yes. Listen, as this thing pulls up a little bit more, the put will be cheaper, right? So the balls will get sucked out. That's the time we get in. I don't want to pay high balls. I want this thing to pull back down so the balls a little bit cheaper. We can make our money go further. Does that make sense? Okay, guys. Any other questions for me? Hey, Keith, how are you? Hey, Siamak, how are you? No worries, Mark. We'll take care of it. Yeah, go. Please go to 10. Don't do it now. Do it over the weekend. Don't do it now. Tomorrow's non-farm. Don't do it now. Yeah. Or do you have two machines? Use it on one machine first. I mean, I have a few, right? I put one machine there. I didn't even tell anybody because I'm afraid if I mention it, people will jump in there and try to do that. No, it's a different animal, but it's very stable. Okay. So remember, 11 is coming. Yeah, they always keep up with Windows, and it's supposed to be 64-bit. Now, what it's not multi-core. I'm pissed at that. Multi-core. You know what I mean, right? Here's the taskbar. Task manager. So you got 16 core, and we only use it for TradeStation. Why? They should make the software multi-core, so like one grabs data, one charts, one does execution. You have all these cores sitting around doing nothing. Now, going to another application, yes, another core is used, but I want TradeStation itself to be multi-core. And this is 32-bit single core. They're like in dark ages. Yes, you can. You can download and have them on both parts. But you have to go back and forth, and back and forth is a reset. So it'll reconvert and come back, yeah. Because some of the DLLs, the dynamic link libraries, have to be loaded. So that's the plus. Okay? Good luck tomorrow with non-farm. It's not an easy day, but we'll see. Okay, tradingcomputers.com, yeah. I usually get it from CUK, Computer Upgrade King. I don't want to pay Falcon prices. Falcon is a big hype. Fancy website. These are a bunch of guys out of Virginia, CUK. Let me go there. Let me go there from website. Make sure it's there, and then CUKUSA.com. Make sure that's the right one. Yes, that's the one. And then I'll copy that and copy it there for you. We have most of my traders either working for me on their own or myself. I have one machine that is not from them, but I got 3 i9s from them. Very happy. The i9s, the problem is chips now. It's different. We got them last year and the year before that. But it's liquid cooled. It runs so fast, and they can what do you call it? There's a word for it. They trust up. They key up the motherboard, so it really moves. Talk to Jesse over there. Tell him you know Hamza Analytics. Yeah, Jesse is the head of the customer service. Very good guy. As a matter of fact, he saved my rear end the other day. Jesse, yeah, there we go. Call. Ask for Jesse. Yeah, and If you don't have a part, I'll tell you. The i9 is a little backlog on either the chip or maybe the some support chips. So you end up paying a premium. I mean, listen, there's something available at the right price, right? Supply and demand. So my suggestion is, if you don't need the i9, don't do it now. Wait till get the supply and demand gets more in line. But right now you can do excellent stuff on NV. I mean, they take a HP NV and upgrade it for you, and really burn it in. I mean, I've never had a problem coming here. Open the box, not working. No. Now I bought one from Amazon, regular HP, brand new. The on and off button would work when you wanted to. It was like my dog. It would feel like. But well, of course, but no, the dog is blonde. That's another issue. Yeah. So I had blonde moments with the on and off button. That's not gonna. With my personality, that's not gonna work. I'm in a combat zone. I want everything working all the time. Otherwise, there's the eject button. So I gave it back to Amazon. I said, it's yours. What are you going to do? I said, I'm going to go to CUK. They have a store there too. There's CUK, computer upgrade kit. On Amazon, you can find even a little bit better prices there. But those are built ready to go. If you want to do custom, you go to their website and say, I want this. You can build it any way you want. On i9s, I did that. I built it there on their website. And they did, within, I think, 2 days, they invoiced me and then they shipped. That's good. Yeah. Then stay with what you are. Stay what you have. If you know them and you have a relationship, stay there. Yeah. It just is the guys I've used for like since I came to Florida. So let's say 2016. So I came in like Thanksgiving of 2015. And I had internet issues, so don't count 2015. Since 2016. So 6 years? Yeah. They've been good. All right, guys. Okay. Chief, send me a note. Okay, we'll have a chat. I'll put you on the right track. But you gotta realize, Chief, I'm not here to throw trades out there. I'm not into quota basis. I'm not gonna promise you how many trades you're gonna get. I worked with a guy at Morgan Stanley called Peter Mueller, also a president. He was what's called process-driven trading. Okay, I'm not going to get into what they were doing because that's confidential. I've signed on NDA. There's a 6th floor, 1585 Broadway, right across from Nasdaq in what do you call it? 42nd Street and Broadway, that area. I learned a lot from him. These guys, the way they operate, they look for an event. What they used to call it, but they were short term. They call it process-driven trading. I need things to line up. If they don't line up, I don't have a trade. Now, some people don't have the patience with me and they leave, so fine. That's fine. Remember, 50% of U.S. households are in the market. So my market is huge. It's huge. I need to work in an environment where it doesn't impact everything else I'm doing, because I'm not going to drop it. Okay? I look for high probability trade. That's it. Otherwise, not interested. And I also think about what the novices could do. I've had earlier in the years when we had, like in 2008, we had traders who were very wet behind the ears. They came in. I'm not judging anybody. I'm not saying any of you guys what you guys are. But it turned out later that after they had a problem, they come back and confess to me that, hey, oh, this was like my second subscription service. I said, well, why did you come here for? We're not good for that. We're not. We're intermediate to advanced. We're not good for entry level. I refer a lot of business away to good people. I send it to CME, educational department. They have what's called trusted educators. I tell them to go there. On the future side, that's why I interview a lot of people. How long have you traded? What have you traded? What are your hours? What's your account size? Roughly. I'm not trying to pry into you finances, but I'm trying to get a sense of how realistic you are based on over 10,000 traders I've had. If it's not, and a lot of them did not make it because our bar is too high. That's all. Yes, exactly. I agree with you. Mark says, yeah. I don't want how many trades is a high probability. Well, on the package, you do your own trades, right? If you do the indicator, you do your own trades, basically. But when you get our service, and you see, for example, those trades, when things line up on the option side, there could be a trade you get every 2 or 3 hours. on the average. So we go 1 week, got 10 trades in. Okay, then we manage it. A couple more bad, we drop them, keep the winners go, and then we replace them. That's how it goes back and forth. But that's, I don't do it directly, but I oversee it. I give them guidance, some ideas. Like tonight, I've got an email about, 10, 15 on the put side, on the negative side. I'm going to take a look. We'll probably take off remember, here's what we do on the option side. This has got 300 names in there. I broke it down to the 100 I like or so, a little bit more. Let's see how many I have. Oh, it's going to 300. Are you serious, Ferry? Yeah, I guess 300. Okay. This is IBD. Okay, these are IBD names. It's 300 then. Yeah, it's a little bit over. Actually, a little bit over. Marty, what are you doing? Oh, yeah. So it's 400 names in there. Okay, this is going to drop. They've expired. Okay, now, it gets ranked based on the algorithm we have, which was used for their 4.2 system. That's everybody wants it now. Okay. And the couple of additional indicators we had, like a CI and so forth, Sigma. We wrote it for the radar screen. Okay. Why did we do that for? Because it ranks it for us. Okay. Actually, there's more to this data. You need it on 2 screens. You write it on 2 screens. Okay. And then the chart for it is another screen. Let me show you this. Well, there we go. This is, you see, this says options. This one right there. See that options? Okay. Now these are connected through. You see that blue bars up there? You connect the symbols. So if I click here, for example, it changes here. Boom, changed it. Okay. Now these are the indicators we wrote. The DMZ, demilitarized zone. Okay. It tells us the fear and greed. Fear and greed. We don't pick it. The machine does, based on what? The vibration you see. People's activity. Okay. Look when it turns. We got the volume below. I mean, it tells you a lot right there. We look at it on the DMZ basis. We also look at it on the weekly Sigma levels. Now, this doesn't have a lot of history. Let's pick one that does. Hold on. TX. Let's see what that. Okay, see that? Now, here's the TX there. You can see this is coming to a fear zone. It's probably good for picking. Yeah, probably. In a good flush, probably I'm going to go in there. Now, and it's a little bit cheap. Yeah, probably I don't want to do 4D. I have some criteria. It's a little bit cheap. The vol is not that. I mean, the absolute move is not that big. But it's 40. I'd be look at $200 stock. Then here's also the weekly Sigma levels that shows by vibration, and we're in a channel. When things line up, you're gonna get a bunch of trades. When things do not line up, we're gonna be very cautious. We're gonna take our time, irregardless of what the public opinion is. I'm not here for popularity. I do what I think is right and what worked for me. Now, look at the sorts. We do a sort. It tells us the candidates. As a matter of fact, here's your action. This is the expert level. Now, you can only run this on 10, Mark. I'll be more than happy to compute the expert level. But you see this buy and sells? You've got 2 sales, the rest of them are buys. And these sorts throughout the day. As the prices come in, it sorts by itself. Boom, boom, boom. And then you get further out. This is on CI. You get different indicators. The sorts go on. This is the one I like. This one. So it says bear level 2 ASO. Let's go to ASO. There's a ribbon on this, by the way. You can see what happened. It's going through a second bubble. This probably is going to end up at 34 area. So there's 3% there, $3 there. That's 10%. I'll go after 10%, sure. I'll put a very cheap, put spread on it. I'll put a stop up here and go away. Point, shoot, and forget. It's like a standoff weapon. You don't need to go into Russia. You could be on the border of Romania and launch a cruise missile, point, shoot, and forget, with a GPS and a JDAM, boom, it goes. Yeah. That kind of stuff. So, but when we're doing it for market timing, that's a totally different animal. You're not looking for a stock specific trade. It's the whole market. And you're going to a wall of 38? Give me a break. Yeah. It's easy to lose your money. I'm not interested. And you shouldn't be either. With that said, I gotta go, guys. I gotta be up early. I've had very little sleep the last 3 days. And last question, anything? Thanks, Greg. You're the best, my friend. Thanks for coming into all these webinars. Hopefully I add a little bit of help there for you guys. And to navigate these treacherous markets, not easy. Okay, guys. Good night. We'll post this the moment the post processing is done, which would be probably, thanks, Dennis. Thank you for coming, sir. That probably is going to be 15, 20 minutes. Okay. Thank you. Bye-bye.